Good morning, good morning. Good afternoon to those of you where it's afternoon. Happy Monday, everyone. Oh boy. I Hey Sherry. No, I don't follow hockey at all. I have there's a kid from Mom's church who's playing I don't know who he's playing. He was playing for the Rangers for a while. Um yeah, I grew up in Saskatchewan, so where's Brett playing? Oh, he's with the Las Vegas Golden Knights. Uh, but I don't know. I don't watch hockey. Hey, Hank. Hockey season goes on forever in Canada. So welcome everybody. Welcome, welcome. Hope everybody had a good weekend. And I have rolled the contract over. So you'll notice we're about 50 points higher with this contract roll. There's a video of you scroll back and you scroll in the description. I have a video there on how to roll the contract, why I do it the way I do, and of course, the business reasons for doing so. So, we have now rolled over into that September contract, and let's take a quick look. The new contract is catching up with the old. So we've got 260,000 contracts in the new one, 277 in the old. That will surpass the old by the end of the day. So what I do is pretty simple. I go and I roll it over using this continuous futures contract, volume-based rollover, back adjusted. There's reasons why I do it because we're volume-based traders and we like to keep track of the position. And it works really nicely. I've been doing it that way for, oh, about 10 years now, and it works nice. So if you feel like it, please check out the video. It'll help you with the confusion of rollover. So our new balance level for swing traders is 56.75 to 57.54. It's about 50 points higher. And the double of that, right? The the profit zone, the 2 times profit zone top is 59.13. and at 4 times we'll be at 62.03. Okay? And it'll also go in and adjust those all-time highs will be considerably higher, but that's okay, right? And we're just back at work now. I redid the balance zones this morning for the new contract, and there's 60.59 to 63 and 3 quarters. Hey Dan, Digital, Kaylee, welcome to all the folks joining us on YouTube. It's good to see you all. You guys had a great weekend. So generally when I trade out this contract, I'm always a cautious guy. Took a little short when we came under 71 and 3 quarters in W period, and I covered at 70 because we couldn't get any lower. Now it's getting a bit lower on us. Point of control has not moved up, but we are getting some liquidation back down. I don't know why that's there. Let me just get rid of that. Just cleaning up the charts a bit. So overnight inventory is pretty long. It's about, 70-80% long. We had a really nice look below. Globex opened on a nice gap down and it allowed the shorts to really grab some cheap product. Came back over 60.17. Am I on the right contract here? Yeah. And then just a big rip up. Right, we've got areas where we don't have any single prints in this profile, but we do have several little short positions. I'd say people are trapped short under 54. Definitely under VWAP. There's some people trapped short from earlier in the overnight. None of the lower stops have been taken so far. Let's see what happens. Now, normally, if this wasn't rollover, I'd be short biased. Right? And what I need to determine on a contract rollover day, and don't go crazy with this stuff, but what I want to determine is how short are those people in the old contract coming into the new one? Right? Old poor highs? I don't quite understand, Raj. Could shorts be trapped near old poor highs? Oh, like from... Oh, yeah. Like from here. Yeah. You know what? I didn't even notice. Right? It was a poor high at first, right? And then U period took it out. So that's true. There are shorts bid here. That's why when X came down here, it caught a bid and rotated back up. It's a good point. Good catch, Raj. Good catch. Hey, Travis, what's going on? Oh, point of control moved up. Maybe we'll get some liquidation now. So it's just a theory, and I haven't proven it, but I look for that point of control in the overnight to move up, and then for us to have a little bit of a sale once they've sold the majority of their goods, right? But now what negates that, of course, is if there's a ton of people trapped short and they come in and bid the market. Then that little theory goes all the way out the window, okay? So all theories and everything that we have, remember they're subject to the order flow of the market of the day, right? So if you're short biased, right, like I am, right? If you're short biased and the market gets to a place and you see there's a bid at 68 and they're distributing contracts above 68, right? Here's the thing, and if you watch the Globex recording, I was explaining really there's a simple reason for shorting a market. Do you see a seller? Do you see a seller and then other sellers competing with that seller and lowering price? First you see a seller and then you see other sellers compete and lower price. That's when you go short. You don't go short when the market's going like this. Right? That's the front end of the move. You wait till the seller shows themselves and other people start to compete. That way you got a place to put a stop. Does that make sense? Do you guys get the common sense part of that? Right? So there's the up move, right? And it's usually tied to a level, right, that we're watching. So it looks above that level and comes back down. What that means is they've run out of buyers above that level. So they got to put it on sale. Then the sellers start to compete and lower the offer. That's when you put in your short and you put your stop above that line. Now, if you are feeling like a big spender, right? If you're a big spender, you're going to put your stop at the top of that candle, right? But for me, that level is the look above and fail of that level. So when you see that sellers are competing, that's when you start selling. This is not for you to sell. This is for size traders to distribute their inventory in the uptrend. This is the front side of the move. This is the back side of the move. And you want to short the back side of the move because the seller has identified that they need to lower price. Right? You want to get rid of, like, say this is a chart of the sales of fish. Well, at this level, the fish starting to go bad. You got to put it on sale. Get the fish out of the door before you're stuck with a bunch of inventory. And that's why sellers compete. Because if sellers don't compete, you're going to be, if you refuse to sell under 95, say this is 95. If you refuse to sell under 95, the other sellers are going to go get all of these clients waiting to pay 93, 94, 92. And you're going to be sitting there holding inventory. Why would you do that? So you sell. That competition among sellers is what lowers price. And when you start lowering price, that's when you've got a short. Otherwise, there's no reason to short a market on the way up. The only reason to hit it out here is if you have to get rid of 10,000 contracts. And since none of us are trading that kind of size, leave this move alone unless you're going long. If you're waiting for the short, wait for the back end of the move. Right? Now that back end of the move will happen a couple of times on the way up. Right? See? Up, down, up, and then it drops, but say you had shorted it here and you put your stop here, okay? And you couldn't get any product on the bid here, then you know to cover the short. Because that little pause is just a little sale to bring people in. You see? Just like this was a little attention Kmart shoppers. For the next 10 minutes, this product is on sale. Oh, you missed it. Now you got to pay regular price. But that brings buyers in an uptrend, right? You get an uptrend, a little sale brings in buyers. A little sale brings in buyers, right? Look familiar? That's pretty much it. So if you're positioned short now, say you're a larger trader and you're going, you know what, JJ? I think I see a seller, right? I think the sellers are here, and if you were doing it this way, so if you went to take a short now, right, and you're shorting those 71, 71 quarter, 71 half, right? Well, your warning level is the top of that candle, and your out is 73 or the top of there. If you lose those sellers, right, that means those sellers have seen buyers and are raising price. Was it somebody this morning asked me if I could see sellers on, I can't, what did he call it? Some kind of a hot foot chart or what the hell was he saying? Can't even remember what it was called. What the heck was he saying? Yeah, heat, hot foot, hot pocket, hot something. Something to do with heat. Right? Anyway, I like, why do you want to mess with all that when you can just use a simple candle chart? Right? So now if I'm short 71, right, which I am on 3 micros, I got a 69 and 3/4 bid in. And if I don't get hit, I might take the offer. Right? On one of those contracts. Yeah, I'll take the offer at 70/4. Fine. I'll move my bid up to 70 and see if I can get hit at 70. Oh, hit at 70. Now I'm going to put a 69 and 3/4 bid in. And my last contract has a 71 cost basis on it. And I'm seeing that offer. Now, if we don't hit my bid at 69 and 3/4, I'll slide the bid up to 70. Flat. Right? I don't know. I'm not trying to insult other people's methods of charting, but I'm just trying to say, what's wrong with simplicity? Right? You can see that there was a seller here, right? This is the failure to take out 73, right? So we sell a little. We see the tops of these candles getting lower. That means sellers are competing. And it's just like I said, that's the back end of the move. You put some bids in here, right? And cover, right? And now you just take that technique and you can expand it to larger ranges if you want. But do some practicing here so you learn your execution, right? Nice and simple, right? Identify the seller, put on the short, right? Then go, right? First thing is identify the seller, put on the short, put in your insurance policy. That's your stop. Then go put, as soon as you're executed, go put your buy orders in. Because if you're not buying down here and it rotates back up, what's the point in trading with a break-even stop? Right? Because people go, I move my stop to break even. What about your fill? Who cares about where your stop is? What about your fill? Right? Don't you want to get filled and make some money instead of put a stop at break even and pay commissions? Does that make sense? Who does business for break even? Nobody. Ask Walmart, do you do business to break even? Right? No. I don't think their shareholders would like that a lot, right? If you're doing business for break even, something to think about, right? Exactly, right? Don't worry that you're not holding the trade for 20 points because a short at 72, 71 only yielded this for now, right? The chart's not down here. So take what you can get when you first start trading. As you get more comfortable holding, right, then you can, take bigger positions and put your bids down here and let the market come and hit you. But if the market starts rotating back up, that's telling you in the short term, the sellers don't need to sell under 70, right? Now, if you build a position here and you're a larger trader, right, well, you could still use 73 as an out. And if you're patient enough to wait for a break of 70, then you look for a break of 68, right? And then 60, 65 and 3/4 is a big level for me. So let's see if we open above it or below it, right? Don't be afraid to pay yourselves, folks. You will hold trades later for more money. Learn what you're doing first. It's not crazy to look for an inventory correction. It's a little bit of one here. Ah, just going to take a look at some equities here, see how they are before the open. For those of you who are trading Tesla 328, if it can stay above 328, that would be beneficial for longs. I think on Friday they printed a fairly sizable block at 326. So they're retailing that block out now in the 331s. And what else do we have? Apple, is there a pulse? 197.20 pre-open. Not much going on in the old Apple. Amazon 213. Everything's just kind of hanging tight after all the Boeing 200. Let's see. How's Micro Squish? Microsoft 475. Those crazy Michael Saylor, 387. He's hanging in there. Michael Saylor hanging tough with MSTR. NVIDIA still resistance at 144.78. Palantir, I'm going to need some new levels. I have to finish that out. And what else do we got? Meta, nobody even talks about that stock, but it's $700 a share. I got to do a Netflix chart. I haven't done one of those in a while. There we go. This is that liquidation that, hey, Doc, how you doing? That we're talking about. We need a little liquidation. It's healthy. Let's go and fill in some of those short bids down here under 65. I want to see the reaction with the new contract, too. CRCL. No, I have not, digital. I'm still wading through the whole coin of bitterness. What do you guys call that? Ecosystem. There, now I sound like a venture capitalist. I'm still not sure of the products. Like, I mean, I own a little bit of Bitcoin, a little bit of Ethereum. What else do I got? That stuff called Solana. Scarf Guy said to buy something called Sui, so I bought a little at Christmas time. That's Raul Paul. And I own some Algorand just because the mooch told us to buy it, but it's not doing that well. It's kind of stuck. I don't know. Scaramucci was on our podcast, and he was talking about this Algorand. I think I owned it at 24 cents or something. It's not that great, whatever it is. I don't even know what half this stuff is. But I buy just little bits of it, just in case the 0 and 1 Mafia get their poop together and make a go of it, you know? Why not? Here we go on our short, looking for 60, 65, and 3/4 on the downside now. Twenty seconds till the open, ladies and gentlemen. Any questions? Just take your time. Wait for your trade. Remember, it's Monday, start of the week. There we go, and we're off. Long 69, selling 71, selling 72, flat at 72.25. So I bought 69 when we came back up. I saw the bid. Remember I was telling you guys to watch 65 at 3/4? Couldn't get underneath it. I went long. Hey, G. Dallas, how you doing? Look for a stop run here. We're expecting sellers here at the overnight high. If they take out those sellers, there's some stops at 80 and a quarter and the previous day high or Friday's high. Oh, excuse me. Now, I was short biased coming into the morning, but when I saw the market couldn't get down to 65 and three quarter, there was my long, my stop was 65 and three quarter. Took the overnight high, right? Shorts came into cover, they slammed them with product. Next set of stops will be the G high and then Friday's high. Hey, Mitchie, how you doing? Right. So, and that's the hardest thing I've ever had to do is learn how to trade against my bias. And the only way to do that, in my humble opinion, is to have an execution plan around it. Nice work. You're holding on to a contract from the London session? Have you slept? Good for you. Beautiful trade. We got a bunch of insomniacs in our room. You guys don't sleep much. Yeah, exactly. The trading syndicate. Not only just a trading room, but if you can't sleep, there's always somebody poking around in there you can have a conversation with or trade with. And speaking of which, folks, if you enjoy what you're watching, please like and subscribe to my channel. And also come check out the trading syndicate. We've got a good community of traders that are helpful. Right, I teach and trade there all the time. Things like contract rollover that we're having, right? Uh, we discuss that. We help you roll contracts, figure out your charts, build trade strategies that are right for you. Use the discount code. It's less than 50 cents a day, and you can cancel at any time. Right? Also, if you want to use OPM, other people's money, our friends at Apex Trader have given us a discount code. Please check it out in the description. Now, back to regular scheduled programming. Look at that VPOC right at the overnight high. That's short covering. What's hypo? Mishi? Is that like in the bank? Hypo bank? Hypo 1 in play. Oh, hypothesis. Okay. Whoops. It's like, why is he talking about a Swiss bank? Okay. uh, sellers at the overnight high. Now, we're underneath the overnight high, so if you're short, your stop is the overnight high. Okay? So you hit the 76 and a halfs, 77 half stop, right? I'll put in a bid at 74 and a quarter and see if I get hit. Flat. That was just one contract. Now, I'm not seeing an aggressive seller at 77 half, so I'm glad I covered that little scalp short. If we stay above 78, rotation up to 80 and a half is your target. How you doing, Mitchie? Oh. Nobody really wants to buy it here. They're being forced to. Remember what I said? If we hold 78, we're going to rotate up. It's not going to be pretty. You lose 77, that doesn't hold. See? It's going to be choppy. Oh, look at that. Thanks, Jeff. There's 80 and a quarter. So our breath is 3-1 positive. So they're just front running that stop at 80 half, selling into it at a quarter. Not enough juice to run that stop yet. Decent distribution. Ugh. Here we go. One more tick. Oh, they sold into it at 50. But folks, you can see how where the stops are great places for targets. You know, like even if you were long at 76 or 77, You knew once it gets up to 80 that there's going to be selling competition. So you can sell into it just with everybody else, and take your profits, right? Now, if you're a more patient trader, longer time frame, you needed to take that stop. But if it can't take that stop, the market's telling you something. Now, see, it's if it if we excuse me. Let's see if we can backfill and then go take it again. Take another run at it. Hey, Billy, what's going on? There we go. Little rotation higher. Not yet. And remember, folks, they are splitting the volume between two contracts. So that does make it a little bit more, um, less follow through. Oh, no, I haven't been streaming all night. No. I can't talk that long, Billy. I do two streams. I do one at 2:30 in the morning New York time, which is 7:30 in the morning London time. And then I do another one at 9 o'clock, which is 2 p.m. London time. So for me, I mean, and the folks in our room, we know that this is just this product here being sold for profit. So this is the distribution of this accumulated inventory. That's why it makes it a little hard to trade a tight distribution, right? So just relax, enjoy your coffee, wake up. Right now, it doesn't seem like they really need to sell it under 76. Nobody wants to pay more than 80. Now let's see if it can go on sale under 76. There we go. Go give 76 a little tap. Oh, look at that. Right? Put it on sale down to 76. They came in hot and heavy. Look at that. Right? That was like, when we went down to 76, that was like opening the door of Walmart. Right? The crowd rushes in. See? Now we're going to run that stop. There we go. Beautiful. Poetry in motion. Right? Little slingshot. Looking for the previous day high, Friday high, 82 and a half. No, you can trade from Sierra chart as well. I'll check the contract volume on the new one. We've almost caught up, folks. So you see the volume, right? It's catching up right now, right? It's just going to start surpassing the old one. So I've got the new charts. I've posted them in the room for you folks. I should have shown the new one off the open. That's my apologies. I was on the wrong chart book. And nobody even said anything. No, I'm on the right one now. Is Sierra chart? Yeah, no, Sierra chart you can execute from it. You go file, open trading DOM for chart. Nice work, Taco. Just a really nice little distribution here. Ugh. So guys, I put in the new chart book. It's in. If you scroll back, now the shorts realize they're hooped. Drop a little buy order. And Dallas, Sierra Chart's not a broker dealer. There's no group discount. Up to 87 and a half. Exactly. Yeah. Got to watch those big green candles, right? These rollover times are always, you don't want to go like really big size. Just get yourself in and out. Get to know the new contract, right? It's the first real day that it's trading. Get to know it. Now we're above Friday's high, previous day high. So what's next? Right? If this continues, right? Obviously we got another little bit of a short squeeze going. Next set of stops is up here at 60.99. Right? Our next level is this one right here, 6,100 and a quarter. There's an untraded point of control here. And what that means is there's supply up there. Right? This has not been traded through. That might be a target as well at 96. Just so you know. Okay? I don't know what that is. I gotta clean that up. Clean up these charts a bit. You guys are all quiet. Still stuck in weekend mode? Or are you guys all short? Under 60-40? I hope not. There are certain times, and I'd like, hey, those guys who use Edgeful and that kind of software, run a thing and see how many times on contract rollover is it up or is it down? Do we get a short squeeze? I'm very curious. I don't keep stats. It would be good to know. You know? They'll throw the stops in. All I know is people just got ripped out of their positions in April, and now the market is almost back to where it was. You know, it's unbelievable. Look at this rip. Jeez. And now we'll just go to 8 times cost basis. See how when we got to that untraded point of control, they started to sell into it? That's where there was a little inventory, right? So no correction at all to overnight inventory, folks. None. Right? 1, 2, 3, 4, 5, 6, 7. One more. No significant correction. Now let's see. Got a little look above and fail of 92.25. So once again, right? If it stays under 92.25, I'd wait another candle or two and let it show itself out. See, no short. Look above and fail, no go, right? When the offer starts lifting, there's no reason to short it. Kind of a runaway train here. I wanted to buy some at 3, but no dice. I wasn't willing to pay 5. I didn't think it would go. I had a 60.93 bid. It just ran away from me. Okay. Looking for 99 now. Yeah, Mishi, I'm looking for the same level as you, where that stop is. Boy, nothing like a Monday morning short squeeze. Well, see, yeah, when trap shorts start covering, Chris, FOMO longs get all frisky, right? When you get some buying in a market, everybody gets frisky, right? And buying begets buying. That's Boiler Room 101, right? Price stability brings buyers in. And then shorts go to cover, and then we get some price stability, and it'll bring more buyers in, right? The new money is not coming to take advantage of anybody. The new money are the suckers. The sellers are taking advantage of new money by raising prices. Comprende? You just got to zig when you zag there. But you're close, right? Now do we have a look above and fail of 92 quarter? Or do we annoyingly find bids at 93? Looks like it's door number 2, right? So the sellers are always trying to take advantage of you. The only time they can't take advantage of you is when you refuse to pay and everybody walks out of the store. Right? Then they have to lower price and chase you out of the store. We get a rug pull? That would be good, William. I would appreciate a rug pull. Need a little bit of selling now. That would be very healthy. Let's see if we get one. That was a long A period, that half hour. There's B period. Poor low, fixed. No rug pull yet. Let's see. First minute. There should be some sellers at 6,100. There we go. There's 6,100 to the tick. Now the sellers should step in. Let's see if we can get under 96. First, let's see if we can get under 96. And then if we can get under 96, we'll look for 92 quarter. You know, as a seller, after, a quarter century of selling, you don't want to lower price. You only lower price to capture the buying. Right? That's why they call it making a market. You adjust the price to match the buying. Right? If they want to buy it at 98, sell it at 98. But if they refuse to pay 98, try them at 97.5, right? If they walk away from 97.5, plug them at 97, right? Then some new people come in. They're willing to pay 98. Raise the price. Let's see if you can go 98 quarter. No? Just sell it to them here then. That's that continuous back and forth. And that's what you're seeing right now. And it's done electronically with algos now, right? They have order flow sensing software, all of that really fancy stuff. So it'll execute 300 trades in the time that it takes a human being to do one. Beautiful efficiency. The market hasn't changed. Just the efficiency of the market has changed. Just like the efficiency of automotive manufacturing or whatever, right? Automation increases efficiency. It's the same in markets. So traders are just basically glorified truck drivers, right? We bring you the product, right? Market makers, wholesalers, we're just basically glorified truck drivers. Now you could think of the market as it's all automated and there are no more truck drivers. So it's like automated trucks bringing you product, just like what they want. Automated taxi cabs, all that stuff. Same deal. Yeah, lowering cost, saving time, increasing efficiency, right? And execution algorithms, you know, they don't get arrested for being drunk and disorderly like market makers. You don't have to send them to rehab. You don't have to bail them out of jail at 4 o'clock in the morning. There's a lot to be said for automation, you know? You know, they don't duct tape interns to like posts in the parking garage. Stuff like that. More distribution. You guys notice something? It's the same kind of thing. See that? So now everybody will want to short this, right? And that's okay. But if this distribution brings buying, we'll take out 6,100. You know, we are. Where's Friday's high? Friday's high is at 82 half. You know, it's a lot of short covering. Hmm. So, how do you know when there's going to be a rug pull? Well, unlike a stock or a penny stock, this thing will actually give you a warning. There's your first sort of sign that you might get a sell order. That these candles all have the same high. The sellers are competing there. So now if you were to go short here, put some bids down here. Right? So that's the first sign. Right? The first sign is that there's obvious sellers right there. And when those sellers line up, you can, that's kind of foreshadowing, right? You're lined up to buy, I don't know, a pair of shoes or whatever the hell it is. And there's one guy selling and he's selling them for $100 a pair. And then all of a sudden, two or three or more other vendors show up and start undercutting him. That's why you get the red candle. Right? Now, those are called shorting the backfill. Right? Shorting the backfill. But that's why you put bids in here. So if the market doesn't fill your bid, which means your buy order does not get executed, then you just quickly grab the offer and close out the trade before it rotates back to your entry. Right? This way you're in control of your trade. Now, it sounds easy, but it's not. You got to practice at it. You got to get quick. Right? And a lot of people go to me, JJ, that's too fast. Who wants a slow trader? Really? A slow trader should be an investor. Right? In my line of work, a slow trader is about as useful as a poopy flavored lollipop. Okay? Just useless. Learn how to be a little quick so you can manage your business quickly. Right? Be quick-witted. You know? Learn how to execute quickly. Right? There we go. See that 94 bid would start getting filled. Right? And say you were short at 98, right? And you had a 94 bid, a 94 and a quarter bid. The next place I'd have bids is I would front run 92 and a quarter. So I'd have bids right here. Maybe at 92 half, 92 three quarter, right? And that way you can monitor your trade. How do you know if your trade's working? Well, if you're short and you can't buy it back at the level you want, that should tell you something, right? You guys with me? Anybody awake out there? Right? If you're short and you have a buy order in and it doesn't get executed, it means there's nothing for sale for you down there. Right? So you might have to move your buy order up. Right? That's called market intelligence. Right? Instead of going, oh, take the profit. Right? There's also a standard deviation that software will front run that standard deviation. That's why you have competition from other buyers. So if you were short, cover, if you were short and you covered a little bit here, cover a little bit here, cover a little bit here. Right? And that tells you that the trade's working. Right? If you're a larger trader and you're looking for a position short, we need a break of 92. We need a clean break of 92. Right? Does this help you guys? This should help you with the actual mechanics of execution. Good. Hey, Nick, welcome to the room. See how we ran out of supply under 95? Now you're back to 98 where you had executed your short. Cool. Feel free to ask lots of questions. If you need any help, direct message me in Discord. I'm always around. Couldn't get any lower, folks, which means they didn't have to sell it lower. Now, see those sellers have been sitting there greedily plugging every bid. Let's see if they step in again. We were up there for what, 10 seconds? Above 6,100? Just enough to plug a few contracts back down again. Let's see where they stop selling. Ooh. Yeah, it's been clean. It has. I'm like a prophet. Why am I like a prophet? Uh, I've just sold a lot of stock. You know, I've just sold a lot of stock. I'm like, when McDonald's says billions served? I'm like billions and billions of shares sold. I was Larry the Liquidator, right? Just liquidate, liquidate, liquidate. Never saw a bid I didn't like. That's why I like futures, because there's no insider with stock that they got for free selling into this, right? It's a much more fair market, right? When you're day trading like small caps and micro caps, there's always some ghoul like myself who's representing the insiders and just dumping stock into the market, right? Diluting the float. But in futures, you have a much more fair shake at things because there's no zero cost product. Nobody gets futures for free. You got to buy it, right? See you, Marshall. Have a good one. Right? But in the stock market, there's free stock. See, but PLTR, they're one of the very few companies who did the right thing in the end. Sure, they treated that thing like a rented mule for the first I don't know what it was, 8 months, year of life, and they sold every single share, but they had the decency to go clean it up without reverse. That's one thing I'll give the PLTR crew, that they didn't reverse split the stock, right? They just bought it all back up under $12 and then jammed it. Much respect to them. I'm really happy because I had some friends that were long that thing, and it worked out for them. Thank God. So as we're just kind of slowly creeping higher, 61.05 is the next stop. Above that is 12.5. As you can see, there's not a lot of product up here. I think I see a stop. Where is it here? Yeah, 61.20, 61.28. I think there's a stop there. That's a hell of a way up. But the way this is going, and then above that, it gets dicey for the shorts. Do you see the backfills, folks? These backfills, they bring in buyers, right? And remember I told you it's the same thing as what happened down here, right? This and this are the same thing, right? It brought in buyers. And the more people shorted it down here, the more are pushing to cover, which is helping drive price higher. Yeah. Monday morning short squeeze. It's not even month end. Previous contract poor high fixed. Thanks, Dean. How you doing? And then one of the new levels I'll have is 61.11 1/4. Just here. Throw this in the room for you guys. Yeah. Contract rollover is such kind of a persnickety time of the trading calendar. It's always good to be cautious. Right. Smart. Nice work, AZS. Let's see how short they are. Do they take this stop or do they sell into it? If they're really short, it'll get up to 6 right away. It's creeping. And once again, folks, before the session runs out, to please remind you to come and join us at the Trading Syndicate. It's less than 50 cents a day. We will help you with your trading. I guarantee you a month with us, you'll learn more in a month with us than 10 years anywhere else. And that's practical information you can use, right? You can also learn how to trade with other people's money like our friends at Apex, right? And there's a discount code for both in our description. And we have some new stuff coming up I'm working on. And so there's always new things for new traders. I'm working on a method for traders to hold trades longer. Those of you who have larger accounts and who actually are able to manage positions. We're going to be doing a lot of work in the summer on trade management, which will help you get more comfortable while you're in a trade. Things like that. And once again, all based on common sense, right? And it's repeatable, it's scalable. Look at them just lift that offer into the fours. And they're coming for it between 3 and 4. Look at the volume. A couple of thousand contracts at every tick. Any questions? All good? Do all markets work similarly? Yes. Because in all markets there is a wholesale element, right? In stocks there are insiders. In stocks there are majority shareholders, right? Or large people who position themselves. There's always the whole U.S. market infrastructure is built around the concept of wholesale. Ah, good question. Stops are just the top and bottom of every half-hour candle. So how you use them is, remember I said the target is 105 and a half, and we went to 105 and a quarter. So if you were long, say here at 6,100, Nick, you know they're going to sell into it here, so you sell too, and you take profit. Now, if they run that stop, it means that there are enough buyers that will run that stop. That stop, anyone who's short on a swing will put their stop here. Or larger traders, if that level gets taken out, they'll put bids there if it comes back. That's why do you see all of that volume here? Those are the people trying to cover before that stop gets run. Because if you run that stop, it'll create buying, and it'll push the market higher. Because stops are buy orders, and buying begets buying. That's why there's a bunch of volume here, because they're trying to cover before that stop. Watch. This will be pretty cool. All right, let's see if we can get there. See how it's running the stop? But the large traders will sell into those buy orders. Because if you know there's going to be buying, and you have product here or here even, you'd sell into it. Right? So the stop run is only one tick. Right? If they get back up there, let's see how many buy orders they can trigger. Because if they trigger those buy orders, it's like a firecracker. One lights the other, lights the other, lights the other. But they haven't been able to do that because the sellers are dumping into it here to take advantage. Exactly. The stop area is a great place to get rid of inventory. And if you, sorry, Nick, there is a video that I did. Where is it? Where is it? Where is it? It's one of our welcome videos too. It's inventory and cost basis. Here, I'll. What's the high of the day? That was the high of Friday. So if we take that high, it'll create a little bit of buying. See? See how they're coming for it now? But this is where large traders will dump because they know that's where the buyers are, right? Remember, what's that guy, Dillinger, he said, why do you rob banks? Because that's where the money is. Why do you sell into the stop? That's where the buyers are, right? Same deal. And single prints, Moran. So this is our first visible short position is here. Who wins? The person who has the lowest cost basis always wins. Right? He who has the lowest cost basis makes the most money. And that's like any business. Thanks, everyone. Have a wonderful day. Come join us at the Trading Syndicate. I hope this was useful. Trade smart out there, okay? Be the hunter, don't be the hunted. Thank you very much. We'll see you tomorrow. Bye for now.